You've heard stories through the grapevine of folks getting all of the way to the closing day of purchasing their new home only to have the deal blow up at the very end. But why? How is this even possible? Today, we're digging into reasons that this can happen, and better yet, how you can avoid them. Let's go. Hi everyone, welcome back to my channel. I'm Bryn Cook here with Hearthstone Real Estate in Eugene, Oregon. On this channel, I talk all about the Eugene area and give you some real estate tips along the way. You've heard horror stories of folks getting all the way to the closing table and then having their deal blow up at the very last minute. How does this happen? And what are some ways that it can be avoided? Today we're going to dig into some ways that you can prevent this from happening before you jump into the buying pool. There are 3 items that the lender reviews when deciding whether or not to lend you funds to buy your next home: your credit, your assets and income, and your debt. They not only verify that all 3 of these items are meeting the guidelines at the beginning of the loan, but they will often re-verify each of them at the end of the transaction as well. They try to build in a buffer, but there can be times when they aren't able to confirm that everything is still in line until the very last day before they're going to release the funds so that the home can be yours. First, let's dig into the topic of your credit. Your credit is primarily affected by your payment history, as well as how many lines of credit you happen to have open. The best thing you can do is to have a lender review your credit very early in the buying process. I've had clients who have started working with their lender to get their credit cleaned up 6 months to a year in advance. It's imperative that you know what is included on your credit report and aren't surprised once you've found the home of your dreams. If you need to come up with ways to repair your credit, you want as much runway to get that done as possible. But once you have your credit score and report looking good, and in the spot you need to be to make sure that you can purchase that home, it's really important that you don't do anything that might affect your credit in a negative way. That means holding off on buying the new furniture to fill up your new home until after the deal is completely finished. A new account being opened and maxed out can drop your credit score significantly and even affect your debt-to-income ratio that needs to be under a certain percentage in order to still qualify for your loan. On a side note, just because you've signed your closing documents does not mean the deal is done. Until the loan is actually funded and the title has been transferred into your name, the lender still has the right to pull a new credit report for you. Play it safe and sit tight to make those big purchases until your home is closed. Your new washer and dryer will still be there the day after you close on your home. Another item that should not be adjusted during the loan process is your income, unless it's for the better. If your loan is reliant on you making a certain amount of money in order to qualify, you need to make sure that you are working enough to make that minimum amount. Here's an example. If you need 40 hours a week at $25 an hour in order to qualify for the loan, make sure that you are working 40 hours a week. The underwriter of the loan can request an updated verification of not only if you still are working at that specific job, but they can also verify how much you're getting paid and how many hours you're working. If you're not working that minimum at the end of the purchase process, they can still pull the plug on your loan. Make sure you're doing everything within your control not to mess with that. I've heard horror stories of people taking time off during the sales process and then not working enough hours to qualify, or worse yet, getting laid off or fired on the day that the deal is supposed to close. Do everything humanly possible to make sure that nothing happens to your income before the home is yours. Let's cover something that doesn't come up very often anymore, but could still throw a wrench into the process at the end of a transaction. Years ago, I worked in the mortgage industry as a wholesale mortgage lender. I had the opportunity to work with a bunch of different mortgage brokers and loan officers throughout the state. So at that point, there were times that people would get to the closing table, realize what their numbers were, and then walk away and refuse to sign. Now, at this point, it's a little bit different because there are laws in place that require the lender to provide all of your numbers, including your closing statement, 3 days before you sign. That gives you a buffer and a little bit of a chance to check out all of the numbers, the fees, everything pertaining to your loan to make sure that you are good to go and are comfortable with everything. If you do not understand, this is your time to ask questions and make sure you have a firm understanding of what you're committing to for most likely the next 30 years. It's on you if you get to that closing table and freak out because you didn't understand. Now, those are the items that you have the most control over. Let's take a look at just a few items that you may not have as much to do with, and they're just plain bad luck. Maybe you're relying on a parent to give you a gift for the down payment and they no longer have access to that cash. Again, it's much better to get that handled early on in the process, but sometimes things are not within your control. Or maybe you needed an ex-spouse to sign off on a debt or release a lien on a property that you shared, and they no longer are willing to do that. Or even worse, maybe someone in the transaction passes away during the purchase process. Again, stuff happens that you don't always have control over, but it can come down to the last minute and blow the purchase up. In the end, there are many things that can go wrong during the purchase process and at the last minute. It's best to keep your head down and keep working towards the goal until all is said and done. Try to resist the urge of posting on social media that you just bought a house until everything is completely finished up. It can save you some embarrassment and some heartache in the end. I hope you found this information helpful. If you did, don't forget to check out my other videos about the home buying process. I'd love to hear from you. You can call, text, or leave a comment down below. I work hard to stay connected. Don't forget to subscribe to my channel and join me for my next video. Thanks so much for watching.